But typically I use the visible range. It's just going to give you the volume that's on the actual screen. So excuse me, the candlesticks. So to calculate however much price action you have. So you come from here to here, it's going to calculate, the highest volume there, the lower volume or the higher volume nodes, the LVNs. So you're gonna make trading decisions and kind of use them as support and resistance um, and target areas. Just make sure you're in the building on Thursday. We go into advanced analysis. And,
okay, on Thursday.
Yeah, Thursday is advanced, so we'll go in there and we'll take a detailed look, kind of at some of the things with volume profile.
All right, for sure. I'll clear up my schedule.
So one quick thing I will show you though is you see we got that volume profile on there. We can also throw in some on-screen correlations. This isn't correlated, but we can throw that in there to kind of make a trading decision with two different pairs and find what we call a fair value. So you'll probably enjoy that as you're growing, and some of the things you can do with finding fair value, equilibriums, finding the impulses, and the reversions or the corrections. And you can do that all based on correlations.
Sounds interesting. Looking forward to it. Looking forward to soaking it all up.
No, most definitely. Glad to have you. So tonight we're gonna be diving into a strategy to improve your entries, your exits. We're gonna be using this based off of a support and resistance. Now, there's a couple of ways we can do it. We can do it from a top-down approach, or you can use the 1 hour time frame. For tonight's example, we're gonna start there. We'll use a 1 hour time frame. We need any oscillator. You can use the MACD, RSI, stochastics, whatever your preference is. For this, we'll use probably the MACD. Try some of this up. Strategy you can use on MC4 or Trading View. We prefer to chart on Trading View, and we'll take our entries on MC4. Now my RSI, or excuse me, I don't know where I got RSI, but my MACD settings are going to be 12, the normal 12, 26, and 9. So fast link 12, slow link 26, 9 are the default settings. Let's figure out some of this. Some of these EMAs. All we want to do is draw off our support and resistance. It's going to be a simple, quick strategy, but I know everybody's at different points and want to learn a couple things like this. So we're really going to be waiting for breaks. I'm going to draw off our support and resistance lines. So for a rule of thumb, if you have trouble with identifying support and resistance, not doing it on a day, let me get to an hour. What I typically look for is places, of course, of wicks and multiple bounces, but I also like to see that area to be a support and a resistance area. So I like to see it where it was playing as a ceiling, but also playing as a floor. One other key thing to remember with support and resistance is that it's never a exact line. It's more of a zone. I do prefer to have it at the body over the top of the wicks. For me, these wicks don't matter as much. They're more just of an area I could use a shade in, because as we drop to smaller or higher time frames, those wicks don't exist. They're either going to be full candles. Most of the time, they're going to be full candles. So for us, we prefer body to body over wick to wick. Once again, the wicks on different time frames don't necessarily exist. They're either full candles. They're typically full candles when you go to a higher time frame, especially inside of a trend. So we'll look like we looked at these 4 hour of candles, these wicks. When we move up to a 4 hour, it's going to be an actual, pretty much a full candle. So that's why I prefer bodies over wicks. So I do keep an account that there was a wick there, because it does show me the buying or selling pressure, but I'm not going to draw from the top. It's more accurate for the body for or my preference. So once we get that done, we need to have our MACD up. One second, let me see how this lets me move. So all we're looking for with the MACD is we're going to be looking for, there's a couple different indications. We can look for something similar to like an EMA cross. So we want to see, once we see the break, we want to notice if the MACD, if the lines are starting to get spread across. And we also want to see 2 of these little histogram levels growing in size. So when we see price break the actual resistance or support. Now this gave us a break and a retest, but then we can confirm when price came back up and tested this actual zone. We got 2 histograms still pointing bearish. We still have the MACD open. There's no cross. So that's a good trade to the downside. Check out another example where we had a support and resistance break. So erase some of this. Let's go here. So we're coming to our chart, fresh chart, hour time frame. We'll go ahead and draw our floor. We can draw our resistance. Remember, it's always the most recent high. If you're familiar with structure, you have a high, a lower high, or excuse me, you have a high, a low, lower high, and that'll be the area of the resistance. We can start to the right, start to the present, look to the past, and you can confirm if that's going to be an area. Here we have price was a ceiling, comes back, it was a floor. That's going to give me an indication that this is a strong area. So we're going to be waiting for the setup in between these areas. If it breaks down, we're going to want to see 2 histogram candles growing. If it breaks up, we're going to want to see 2 histogram, these little bars going up. So let's start it. I'm going to play this out. We'll see an entry live. So we see price start rejecting right there. So we got price gave us a hammer. You don't need to know that though, but we see the price breaks. And directly after it breaks, it gives us 2 growing candles. There's our entry. So we would took the entry here. And we'll see if this plays out. Now, as far as stop loss, you want to have stop loss beneath the previous zone or resistance. So typically behind this hammer candle, let's see what that means. So this is gold. Of course, gold is going to be a wider stop. It's probably about 100 and something pips for a stop loss. But we'll take a look at a regular currency pair, and this will probably be about 30 pips. We're working on hour time frame, and we'll see if this played out. And we already have our over 100 pips here. Want to aim for about a 2-to-1. So this gave us about 230, 240 pips, 100 pip of risk, and it played out. 1 second. So that initial trade went our direction. Once again, criteria, and we're gonna jump on to the next strategy. It broke the zone. We found that zone by starting to the right, looking to the left. It played as a ceiling and a floor. So let me do this. Make sure everybody have the rule base. So okay. Ceiling. And I'll post this diagram in the group so everybody can use it as a walkthrough, as well as the video. 6. And then, so when we're plotting that SNR, we'll use the areas that's been the floor, the ceiling, or supporting resistance. Once we see a break, either direction, we want to wait for 2 of these little histogram channels down here to grow in size, whether it's going to be bullish movement or it's going to be a bearish movement. The crossing, we want to see that the EMAs are open on the MACD. That'll be our entry. Directly either the candle or the next candle that forms once you get the break. So your stop loss is going to be beneath the structure. Typically, you'll see a wick, or you're going to place it beneath that support or resistance point that you drew. Also, you can use the MACD again, but that's going to be a slower reading. Showing 2 bars, the opposite direction. Now, y'all know I like to break it down a little bit more in detail for y'all. So we want to work on the hour time frame, but you can always kind of give yourself an earlier indication if price is going to continue in the opposite direction. Until you get used to this strategy, just stick with these 3 rule bases. You're going to win more trades than you lose. Use the same type of risk management unless you're compounding into the next week. So you had a good week using this strategy. Next week, you may raise up the actual lot size if you're just using this strategy only. So to kind of get an earlier indication, let's say we're going up. Let me move this out the way. Say, for instance, we got the entry reason, broke this line here. And then price came up, but it started giving us this pullback. Well, I'll wait and find an example where it reversed. If it was to reverse here, the smaller time frames would give us an indication. So we would jump down to like the 30 and we would start seeing, okay, is there a support level here? We'll do the strategy again on a smaller time frame and we'll see if there's 2 bars growing. That'll give us an earlier indication that we can go ahead and get out. But as you're first starting to back test this strategy, just back test it the way it's set up. And it's I can't remember the win. I think it was about a 75, almost 80% win rate if you do match the criterias. When actually in the trade, you just want to manage it. Since it's an hour chart, maybe every 3-4 hours, you want to come in and check and see if it's progressed. Be a little relaxed. Let your trade, give your trades time to work and progress, because you want to try to see a 2-to-1. So if your stop loss down here is 100 pips, you want to try to let the trade run for 200 pips. So we'll jump into a new pair, and then we're going to jump into one more. We're going to jump into another strategy. Somebody drop a pair in the chat. Somebody drop a pair and we'll look at it. And I'll post the recording of this video in the private chat. GJ, let's look at GJ. The strategy works on any time frame. Actually, the higher time frames, the better. I wouldn't try anything lower than 30 minutes, but it does work on higher time frames as well. Let me just scroll this back so I know what's going on. I'm gonna even do this so it doesn't look like I'm cherry picking. I took off all so I don't know where the market's gonna go. And we'll rewind it. So follow our rules again. We're gonna put that support, the resistance there. us a support here. We want a clear break, a full body to break. There we go. So we got the break. I really don't, it's not too wide. It still has these. So these are little things you'll start seeing out of the eye. I really don't like this yet because, I mean, look at all this resistance there. I would like price to have a little bit of a larger candle. So I'm going to stay patient here. I may not take the trade. I wouldn't take that trade there. But it did, though. It followed through. It broke down. But I still would like a better entry. So there we go. Well, it didn't. The candle didn't stay. You want to look for a full candle. So in this instance, since I'm not liking how the last example it gave us a nice big candle, break, a nice candle break. All these have been little bitty, no momentum candles. So what you'll do is at this point, you can draw your new support and resistance. So we can kind of work with this break, full candle. So we want to see, okay, 1, 2, there we go. It won't let me pause. So from this break, we got, well, no, they didn't. They're as good as y'all can see this example as well. It didn't grow in size. It decreased. So we wouldn't take this trade on that criteria. We're gonna wait. So now we got the opposite direction. So that's why we didn't take this trade, even though it gave us a few pips. Something was off. The momentum, there wasn't no push. There was resistance. We could have took this one, but it only gave us a 2-bar play. So we really want to see, full candle that kind of breaks. If this candle here was the one previously, we would have took that trade, but it didn't line up. So when it did give us a proper break, our entry, we looked down at the oscillator and it didn't give us the growing histogram. It showed us that the price momentum was decreasing, and there was a nice reversal based off of that. So we get back up here to this previous resistance area. We can just stretch that out. Bam, we get a nice break. We have 2 bars growing. So we take our entry. So where we entered it. Again, we're going to want our stop loss underneath the support and resistance. Preferably, you see how it has the wick again. We'll kind of look for that wick. See if it hits stop loss. And that was a dud trade. It hit stop loss, so won't win them all. We'll set back up. See, that's about a 40 pip loss. So we got 1 win for 150. We got a loss for about 40 pips. So we're still up 110 pips. We're going to adjust our lines. And don't get yourself down. It's good you're seeing examples of when it doesn't work out, because nothing's 100%. So now we're going to readjust. We're going to keep letting the strategy work over the long term. So now we're going to be looking for another break. So when we started eyeing, I used just what I seen because we didn't have any of this price action. Now that the price is moving a bit, I don't have to be so tight with the stop and resistance or with the support and resistance. I do see a clear high here. And I got my area right here where price has been a ceiling and it's becoming a floor, been a floor. If I wanted to get technical or precise, I could use this area here. It was a floor in the ceiling. Well, I wouldn't use. I use the high because this is a lot of congestion here. So never mind on that. But we're gonna use these two areas here. There's a break right there. So we had that break. And we had the growth with the next two candles. This would have been our entry. It did wick a bit here. So price broke and it pulled back up. Price opened up. When it opened, it did come to the high. But if you notice that the downside volume is still increasing. So we would have took that after the two counter bars open. We would have took that here. Yeah, so I didn't even put but you see the trade, that was a nice trade that worked out. I didn't put the stop yet, so I always stop first. My stop loss would have been behind this wick, behind the support level. So from our entry, you're only looking at about a 26 pip stop. Currently, we're about 80 pips in profit. So at this point, you can either move your stop loss down, protect some of the profits, but move the stop loss. That's what 26, 40, about 40 pips in profit. So right now, you already paid for that loss we just had. You back break even. You can decide to let it run, or you can take everything off the table. It's up to you. You have your 2-to-1. You actually got a 4-to-1. At this point, you can take the profit. For beginners, just take the profit. Take the 40 to 80 pips. If you're a more seasoned trader, you can move the stop down. You want to let your trades, you want to learn how to let your trades run. That way your winners are paid for the losers. So we're going to say, for example, we got 40 pips booked. We're going to just keep letting this run and see what it does. So here it did come back, hit the 40 pips. Would have been good to just go ahead and take the profit. But let's let it keep running and see if we didn't move our stop early. Let's say we just moved our stop to break even. So no, it would have been better to take the 40. You get to the point though where you start making decisions to hold. And sometimes like we would have kept it above this, price could continue and give us another, you can squeeze pips out of the trade. So go from 80, you may end up with 160 pips. Risk free, you will are 20 pip risk still, but you're stretching out that trade. You're giving that trade room to work. So yeah, at that point we wouldn't have got no extra profit. It would have came back up and it reversed. No harm, no foul. Now we just had another. It's funny because right at that zone we had another break. We have the 2. So technically the break was here. We have 2 up candles. So we would have been in here or here. And this will be the last example, and then we'll jump into something else. So then we got the break here, and then of course we want our stop loss beneath this zone. I don't really have any wicks where it broke. Price was just coming in a nice, strong, bullish trend. So I can look to the left. And in this case, I'm gonna place it underneath that previous, that I already knew this was a zone from earlier that played pretty good. So I know there's gonna be some type of reaction here. And we'll just hit play. And then here, I would want to go ahead. There it go. It took off. That was a nice trade. Still going. So in this area here, when we get this consolidation like this, this is where the mindset, or you become a better trader when you're making critical thinking decisions based on your account size, based on what you're trying to do. Are you up for the week? Are you down for the week? This is where you want to make a decision. Do I want to hold this trade? It looks like it could come back to me. There's a lot of red candles. Within dual cord, you don't want to be timid. So I'm not saying this to make y'all nervous when you're taking the trades. Like the best thing is to just back test this and just let it run, or use a small like $50 account and just follow the rule base. Yet when you're trying to sharpen your sword, you want to get to the point to where you're gonna maybe you can cut the losses before they hit stop loss. Sometimes it works in your favor, sometimes it doesn't. You find balance on when to do it. The only way you're gonna be able to find that is through execution, steady taking the trades, trying it out each different way, and you'll feel what flows best for you. What works for me may not work. You may need to, add just your own little touch on it. It's kind of like cooking. When we cook, we all got a little season, a little extra that we may add in there. It's gonna make our food taste different than someone else's. So it's kind of that theory. It's learning how to maneuver in. We looked at how to let them run longer and finding a balance in that. And then this is how to cut them early using this strategy. So you let your winners run, you cut your losers. So we just gonna let this run and see how far it goes. But is everybody kind of following the strategy so far? There's any extra questions on? Oh, hold on 1 second. At this point though, we already got a nice move. This is about 100 pip move. You only risked 28 pips for a 100 pip move. So at this point, you don't want to be greedy. Lock in some of the profit, move that stop up. Take at least another 40, 50 pips. Just let it run. And it's paying you out big time on this one. Now, at this point, you came back maybe 3-4 hours, move that stop up again. Now you done locked in 100 pips. So I do like this strategy, man. We'll visit it again next time. Was there any more questions on this? We got a few more minutes. What I will say is, like, even at this point now, you're starting to see the structure. Let's say we didn't move our support and resistance here. So we see that this is the setup is setting up again. So we'll say that for the next round, but you can actually, start getting second entries using the same strategy. Get another entry. So that would be your floor. highest high. That'd be a ceiling. Got this stop loss already in profit for 100 pips. It's making a nice little, it may make a nice little flag pattern there. Well, we didn't get to see we get to break yet. We're getting close to breaking this. We get a nice candle up, that'll be a second entry, so you'll be 2 trades in. One of them over 100, about 150 pips. But we'll work on it. I don't want you guys to come out swinging and get greedy. At this point, you got 100 pips, let the trade run. Or at this point, it went up to probably about almost close to 200 pips. So you can go ahead and just book this trade. From the back testing, we took 3 trades. We had, or was it 4 trades? I think we took 4 trades. We went 3 for 1. We got 100 pips on gold, a 40 pip loss, about 150 pips on this one and 40 on the other one. So we're looking at about 300 pips on this strategy, just using, those 2 pairs. So let me know what y'all think about this strategy, man. Y'all think it's something y'all want to back test? Or? Talk to me. Or is this too? Is this basic for y'all? Is y'all want to go into y'all want to level up a bit? I got a few more minutes. Is this a good strategy for y'all to back test? Or?
Yeah, I'll try it out. Definitely look at the replay and stuff, get the settings and everything, and I'll back test it and try it out a little bit.
Indeed. Yeah, it's pretty simple, straightforward. You just use support and resistance and the oscillator. You don't got to make it hard. Just simple. The real sauce in it, bro. Is self. Is you. What are you gonna do when it? That's why I gave those more detailed examples. Like when pull down. What is your thought process?
Yeah.
And a lot of people sleep on that, but that's where trading really is won. It's not in the entry. It's not about just necessarily exit. It's about what you do when you end the trade.
That makes sense. A lot of people definitely don't talk about that aspect of trading.
Nah. They make you think it's something that they got the secret sauce, so they just doing something that can't nobody else do. Nah, it ain't that. It's just come back to how you react, man. We don't want to predict. We more want to flow with the market, and we want to react to what the market's telling us.
Yeah, that definitely makes sense. So I'm gonna definitely look into it, test it out, and I'll try it on my pair too over the weekend for sure before I put it on my MT4 phone and trade it off of there.
Yeah, indeed. Remember, you can always get some clear, kind of like forward testing with using a replay function on TradingView. So you can always rewind it and just trade it like it's live.
All right, cool, for sure. I appreciate it, man. Thanks.
No, I'm glad to have you out, man, and rocking. So tomorrow will be mindset, and we'll do a midweek review, kind of set up some structure for some pairs that we're gonna be looking at. And then I'm excited for Thursday. That's when we add on the different elements. We'll look at some more advanced technicals. But I appreciate everybody's time. And before we any outro questions, thoughts, anything like that. If not, appreciate y'all time. We're gonna keep rocking, man. Y'all fall in tomorrow, same place, same time. Y'all trade safe.
You too, man. Easy.